What is gap insurance and should you buy it? Next on the Muzi Minute. Hey guys, welcome back to the Muzi Minute. This is episode number 5, and today we're going to be discussing gap insurance. And with us today we have our finance manager, Scott Brocklesby, here to help us through our understanding of the product. Welcome to the program, Scott.
Thank you. Thank you very much, Marshall.
Before we get rolling, could you take a couple minutes and give the viewers and listeners a little bit about your background in the auto industry?
Sure. I've been in the business since the mid-'90s. I got into finance in '99, and I haven't stopped yet.
Awesome. So I think you're more than qualified to be discussing today's topic.
Absolutely, Marshall.
All right, so let's dive right in. What is gap insurance?
Gap insurance, it arises from the name of guaranteed auto protection. It protects the consumer in a retail installment agreement or a lease from having negative equity affect their own pockets in case of a total loss or something of that nature.
Okay, so basically gap insurance helps protect you. It pays the difference between the actual cash value of your vehicle and the outstanding loan balance in the case of a total loss?
That's correct, yeah.
So how is that actual cash value or ACV calculated?
What happens at the insurance companies obviously have a special department for that. They go and look at auctions. There's a site for NADA, National Automobile Dealers Association. There's Kelley Blue Book. I'm sure you heard these names. What they do is they get a value on the vehicle depending on the age, the condition, and the mileage, and they come out with a certain number on that vehicle. So what they'll do is they'll take that number, discuss that with the customer, obviously the client, and they'll agree on a price, what the vehicle is worth, and what they're going to pay.
Okay. So are there certain clients that you would recommend get gap insurance?
Absolutely. If you're leasing the vehicle and the manufacturer's leasing does not automatically come with a gap policy, then that's obviously a suggestion there. If you're financing the vehicle and not putting any money down, if you're doing long-term financing, if you're rolling negative equity from another vehicle into that loan, I definitely recommend it then. If it's a situation where you're putting a third down on a short-term finance, then obviously that's not recommended.
Okay. So maybe a cash buyer isn't the right buyer for gap?
A cash buyer cannot purchase gap.
Okay. Perfect. And how much does gap generally cost?
It ranges depending on the term and the amount. It could be anywhere from a $500 policy up to about $1,000.
Up to about $1,000. Can you get a gap insurance on a used vehicle?
Yes, you can. You can get a new and used vehicle, and once again, it's for retail installment agreements or leasing.
Okay, so what is the difference between gap insurance and, say, an extended warranty?
What an extended service plan does for you is it protects against the mechanical components of the vehicle, such as a transmission, some of the electronics and the computers, and so on and so forth. Where what the gap is doing for you, it's protecting you in a situation where you owe more than what the vehicle's worth. You're making payments on it, but you can't pay it off fast enough where the vehicle is actually depreciating faster than what you can pay for it. So if the vehicle is totaled or deemed a total loss, what happens is that the insurance company will come up with a number. You'll agree to that number. They'll cut a check, mail it to the bank. The bank will then receive the check and state, okay, let's just make up something. $10,000 is what the agreed upon price is.
Sure.
Send it over to the bank takes the money, says thank you very much, and they notice that the loan amount is still for $12,000, so there's a difference of that $2,000. You're responsible for that difference, where if you had the gap policy would actually pay that difference for you, as well as pay up to a $1,000 deductible. Therefore, you're not paying for something which you don't own anymore. And no one wants to do that, obviously.
Right. So if I come into the finance office, I'm purchasing a new vehicle, and I decide to get the gap insurance or gap policy. How is that financed? I mean, can I give you money up front, or does that get rolled into my loan? How does that work?
You could roll it into your loan. You can pay it up front, but obviously it has to appear on your loan because it has to appear on the retail installment agreement. Because if it does happen to your vehicle, what they're going to do is they're going to first look at your retail installment agreement and see if you actually have purchased it. So you cannot buy it on the side, but it has to be done at time of sale. It cannot be purchased months later on. It has to be done at that point in time when you buy the vehicle.
Yeah. So when someone comes in to purchase a new vehicle, would you generally recommend that they get gap insurance?
Everyone's situation is unique and different.
Yeah.
So it's kind of tailor-made towards the individual on what they do need. So an assessment is made at the time of purchase on whether they should receive it or not.
Yeah. I mean, an interesting consideration is depreciation of a new vehicle. It seems like a new vehicle, from what I've read, is somewhere around a 19% depreciation in the first year. Is that something consumers should take into consideration?
Absolutely. The largest depreciation is within the first 2.5 years. So that's really the red zone, as they call it, when it comes down to the depreciation of the vehicle. So yeah,
Awesome.
If you're not putting it down a decent amount of money, it's definitely recommended.
Awesome. Well, that's a lot of good information there. I think we could probably talk about that for a lot longer, but hopefully you guys found it informative as well. I want to thank our guest, Scott Brocklesby, for spending some time with us today. And thank you guys for tuning in, and we will see you again next week.